right. Lots to go through today, ladies and gentlemen. Home prices could drop by 10% in early 24, according to TD Bank. Now, why would they say such a thing? Canada's second largest bank says averages home prices could drop as much as 10% by early 2024, thanks to a surge in housing supply in two provinces. And that would be BC and Ontario. Does the data reflect that? Ontario's sales to new listing ratio has plunged to 39% in October from 63% in May. A sudden surge in supply is largely behind the deterioration in the ratio, abetted by a more prolonged drop in sales. How is Toronto doing? Well, Toronto just saw the worst year for home sales in 23 years. That's pretty low. That's bad. That's not kind of bad. That's really, really bad. That's bad. Like if you're a realtor in Ontario, might wanna not be a realtor in Ontario. So the Toronto area real estate sales hit a 23-year low as the market took a significant hit last year from high interest rates and a slowing economy. So the prices haven't actually gone down that much in Toronto. We are, below the COVID highs, but the actual sales volume is very low. Total number of home sales reached 65, almost 66,000 in 2023, according to data from the Toronto Regional Real Estate Board, the lowest sales recorded since year 2000. Now, is it just Toronto that this is happening to? Or are there other places across the country that are experiencing this slowdown? Let's check out Mississauga. Mississauga's right beside Toronto. Home prices dropped to nearly $950,000 in Mississauga. Wow. A sluggish real estate market means properties are taking longer to sell and prices continued to drop in Mississauga. That's serious. Where were we? So the average home price in Mississauga declined 4.2% to $951,600 in December. And the average home price in 2022 was $977,000. So we're down a bit there, but that's not the end of the world. So a single family home is still well over $1 million in Mississauga. Let's see what's happening in BC. Benchmark home prices fall all over interior British Columbia as weak year ends with a whimper. Well, that's the interior of BC. Surely it's not the same in Vancouver and on the coast. It can't be that way. So that the benchmark prices were down almost all the way across the board in central, north, and south Okanagan, as well as in Kamloops. Okay, so in the South Okanagan, prices fell 7% to $714,300. North Okanagan, they fell 3%. Kamloops, they're pretty well flat, down 1.7%. Now let's see what happened in the Fraser Valley. So that's like south of the Fraser River in the lower mainland BC. Fraser Valley closes out 2023 with the lowest annual sales recorded in 10 years. Yikes. High interest rates kept a lid on sales and listings in Fraser Valley in 2023. So Fraser Valley ended the year with 14,713 sales, according to its MLS. And that's a decline of 4% over 2022 and 23% below the 10-year average. That's really low. The benchmark price for Fraser Valley closed the year at $988,900, down 6% from 2023. Let's see. Okay, Windsor, Ontario. saw its lowest monthly housing sales in nearly a decade. So Windsor is right across the river from Detroit, a lovely place to be. Let's see. So here I'm looking at now Guelph area. Average price of a local home drops under $800,000. So in Guelph, Wellington County area, if you look at this nice chart that they provided, looking back to the February 22 highs, they've gone down about 20%. So if you had purchased a home for 20% down and it went down 20%, you lost every single penny that you put into it. And a lot of people buy it for less than 20% down. So you could have lost all the money you put into it and then some, and you might not be able to afford the mortgage now because the interest rates have risen so much. What's happening in Calgary? Calgary's rising home prices, low inventory likely to persist into 2024. We haven't seen spreads narrow like this since 2006. That's pretty serious. That's a long time. The city's benchmark price landed at $570,000 in December. So it's a lot cheaper to live in Calgary, and Calgary's pretty nice place to be. We look at this chart from the December data. So this is City of Calgary sales going back to 2013. So that red bar there is our 10-year average. We are significantly above that. So while places like Ontario and BC are seeing decade or multi-decade lows in sales volume, we're seeing not record high sale volume, but pretty close to it. Pretty close to that. And with this sales volume kicking in, we're seeing a lot of new building going on. Let's see how the affordability is going to be affected in 2024 going up. So according to RBC, let's see what they happen to say about the affordability. So RBC says that several markets, including Vancouver, Victoria, and Toronto, were grappling near record lows in affordability. There's a long way to go. It's going to take a while to get anywhere better. So, despite these challenges, RBC said there are faint glimmers of optimism on the horizon. Good news is that the latest bout of housing affordability deterioration has likely run its course, so it's probably not going to get any worse right now. It's just going to take a while to get any better. All right. Now, how are we doing for housing starts? So because of the price deterioration, the housing starts are, so that's when a builder digs a hole in the ground and starts building a home. That's called a housing start. They're declining because the market is very uncertain. Interest rates are high. These builders take on loans, and the interest charges are much higher than they were previously. So Canadian housing starts plunged 22% in November. Seasonally adjusted annualized rate of housing starts fell to 212,000 from a downwardly revised 272,000 units in October. So that's low.